Hey guys, Akil Stokes here of Tier 1 Trading, and welcome back to another one of my weekend videos where I take you around the markets and show you some of the best opportunities that are on my radar for the week ahead. Before we jump into today's video, just want to remind you that our Confident Trader Collective workshop, or the recording from that workshop I should say, will be removed on August 31st. So if you haven't had a chance to go through all of them yet, I recommend you take some time this weekend and do so. As you can see, there's a lot of presentations, about 10 plus hours. So make sure you plan accordingly and don't wait until the last minute. Trust me, none of the information will be retained if you do that. So I'll put a link in the description box below. Hope you guys enjoy the workshop, and I hope you guys enjoy this week's video. So if you've been away from your charts for maybe the last few days, you're probably coming back to them and saying, what the hell happened? As you see the massive amount of large candles, long wicks, corrections that come after that. And the reason for those moves is that we've had a very busy fundamental week. I remember coming in beginning of the week, talking to our traders saying, hey, here's what I expect. I expect consolidation Monday through Thursday. And then once Thursday gets here, boom, we're going to see some fireworks as we have a handful of fundamental events coming out. And we are very technical based here at Tier 1 Trading, and you guys know that from watching these videos day in and day out, or week in and week out for you guys on YouTube. But you also know that I preach the importance of having a general understanding of fundamental events. Maybe not necessarily to the point where you're taking them into account and they're dictating whether you shoot for a home run trade or not, but at least being aware and knowing when is the best time to stay out of the markets, when is the time when the fundamentals are going to be the drivers and the technicals are going to be irrational, and it's just kind of a reckless gamble to be involved in anything. And one of the ways that I've done that, because I have zero economic background, is I just read a lot. So I go to a lot of websites. I kind of have my chosen few right now, but I read articles and I learn by reading about what's happening. Why is it important? What does this affect? And a good place to go to for that, if you just want a handful of articles, is finviz.com. You can look in the left-hand side and it'll give you kind of a list of different articles from different places on the internet. That way you don't have to have a million tabs open. But something that I started doing this week, and this was after hearing Anthony's presentation at our workshop last week, is going to his YouTube page. So going to the Amplified Trading YouTube page and just checking out the daily briefing. And you can see these are short little videos. They're 20 minutes. I think the longest one I watched was 30 minutes. But it does a good job of kind of breaking down what's on the radar for the day, explaining what it is, why is it important. And it's something that's been able to save me a lot of time and really streamline that part of my pre-market checklist. So I wasn't asked to share this or anything. I just, I try to give you guys the tips that I personally use. You guys know I'm transparent here. So if you're someone that wants to be in the know about either learning about news events or just kind of knowing what to be aware of, you don't happen to be in a live room where we can warn you, make sure you check out the Amplified Trading YouTube channel. There's a daily briefing video. I'm sure there are others as well. I just started watching it this week, but I found it to be an excellent source. And for me, listening is a lot easier than reading in the morning. So let's hop into these pairs. We're going to start off with, where do I want to go to today? Give me a second. Let me check my notes. We're going to start off with the Aussie Canada, and because the Aussie Canada is a little bit of a tricky one. It's a kind of a no-brainer trade in when you first view it. However, when you look a little deeper, you'll actually see that this may be a little bit of a tricky area. And again, the news events this week, just for you guys, I don't think I mentioned it earlier, was, we had on Thursday, we had Fed Chair Jerome Powell speaking about future monetary policy. We had Shinzo Abe resigning this morning, Friday morning, the Japanese Prime Minister, which was kind of a surprise update. We have the Bank of England Governor Andrew Bailey, I think, spoke at Jackson Hole this morning as well. So again, things have been crazy. I'm recording this on a Friday afternoon, so this may even look completely different by the time the weekend comes. But as of right now, right, we're seeing a lot of strength in the Aussie, a lot of weakness in Canada. We did have some Canadian news come out today as well. But you can see that we're going right into a previous level of structure, right? We go through a process here at Tier 1 Trading called IPDE. Identify, predict, decide, execute, right? We identify that price has been pushing up. And I want to ask myself, where is price currently trading at? And if I just drag this yellow line up to where we're currently at, boom, you can see we actually ran into the shoulder line of a previous head and shoulders. I'm sure you guys remember this from past videos. This is back in early August, but right down here. And if we go to a 240, you're going to see a clearer picture of this. You're going to see that price is rolling up to that level, or price has arrived at that level. The RSI has gone overbought as expected, right? Relative strength indicator. The higher the number, the more strength is in the market. And at a first glance, this looks like an ideal place to look for a short trade, right? It'll be interesting to see how this week finishes. But if we even go one more time frame down to a daily, or to be a 60-minute chart, you'll see that we're starting to consolidate. The market is starting to stall. Now, here's where a little bit of intuition comes in handy. And if you guys aren't familiar with intuition, right, go check out the Trading Coach podcast, available Monday, Wednesdays, and Fridays on your favorite podcasting app. Right? But I did an episode on intuition. Intuition is basically experience in the market, and it's the ability to turn those experiences into knowledge. And that takes a lot of work. In order to gain intuition, you can't just expect to kind of just be in the market. You have to be purposeful in the market. So you have to purposefully be going back through charts and looking for this and looking for that. And when you find something that looks interesting, writing it down and then researching it and looking for more opportunities of it before it really becomes an intuition. In many cases, it takes losing a lot of money. And that was my example, where I gained a lot of intuition by losing money, scratching my head saying, why did this always happen? And then doing some research and finding out that there is a common occurrence here. And what's interesting to me is this, right? And this is why I love these VS1 levels. These are the red and green boxes that are on your chart, because what these are our visual structure and or structure indicators, so visual support and resistance indicators, and they're meant to give me a heads up of powerful levels of structure. At least that's how I have them in my settings. And you'll notice that if I delete my chart here, right, we don't have a VS1 at this level, but we do at this level. And that's going to give me the heads up that, hey, this is going to be a more powerful level of structure than this. And whenever I see what I call overlapping levels of structure in general, I always assume that the highest one is going to be the more important one. And I have a feeling, right, that this may end up being a little tricky area. If we go back to that 60, right, it may at first glance look at it like a positive sign that we're kind of going sideways. It is the end of the week and it's Friday. This is what happens. But it may look like a positive sign, like, hey, price is slowing down at structure. Good sign for a reversal. RSI is starting to diverge. But for you guys on the platform, what else does this look like at this area? If you're not on the platform, you can type it in the comment section below or whatnot. But what does this look like on this area, right? We could also be forming a high and tight flag, right? And we'll see something similar over here. And what wouldn't surprise me, and obviously this one broke to the downside, but what wouldn't surprise me is that if we formed this consolidation, the market tricked a lot of sellers into the market, looking left right here, looking at, we're at a previous level of structure, took those sellers out, right? Took their buy stops out and rallied further up, which is going to offer an opportunity, for a buyer to get involved in a move higher, like a breakout trader, for example, or just a cautionary tale for maybe you want to do one of two things. Maybe you only want to wait for the higher level of structure to be hit before looking for your counter trend move, your structure trade to the downside, or you want to wait for a cautious approach with trading at this current level of structure. Now, my rules are I'm a structure trader. I am interested in this level, but I'm not interested in being aggressive. So what I'm going to need is I'm going to need I'm about to say controversial, right? I'm going to need a conservative way to approach this, meaning I want the market to give me every sign in the world that we are more likely to go short than going long on this particular opportunity instead of being aggressive. So it's a good example. I know we've talked about this over the weeks about kind of, adjusting your aggressiveness or conservativeness based on the trading situation. This is a good example of that here on the Aussie Canada. The next pair that we're going to take a look at is going to be the Aussie Yen. This is going to be a reminder, a refresher for you guys, because we've been talking about this for like 2 months, and ever since the Keel jinx hit it, right? Ever since we started talking about it, it's done nothing. But remember, this was a trading opportunity with kind of a double signal, right? We had a head and shoulders bottom forming here, And then as we formed as we made our way back up to that neckline, we actually put in an ascending triangle, right? So head and shoulders bottom is a potential reversal pattern where if that neckline is violated, we would expect a reversal from that bearish trend to a bullish trend. So for price action to spike up. An ascending triangle is also a bullish breakout pattern where the lows keep getting higher, the highs remain the same. Eventually the sellers give up and say, hey, you know what? Not working at this level. Let's find another spot, and we see a breakout to the upside. So we had that confluence of two different trading ideas put together, pointing us in the same direction. And that's what we're looking for when we trade. And you can see that yesterday we finally got the break and close above. This is going to confirm both the head and shoulders and the ascending triangle. And now we're looking for long opportunities so we can trade this bad boy up. And again, we can trade it up to our previous structure highs here. If you're conservative, you can look at 79s. If you're a little bit more aggressive, the highs up at 80. And what you should be looking for here, if you're not a breakout trader, if you didn't involve yourself already in the trade, is you're looking for a pullback. Right, so once again, we have our VS1 levels here. You can see a big box and a small box representing that ascending triangle and that head and shoulders neckline, right? You can look for a retracement back down into this zone and an opportunity to get higher or to get long, right? Something like a complex pullback would give us an opportunity, AB equals CD pattern right inside that zone. Or if you're aggressive, right, look for confirmation at the end of today, right? We currently, we had a breakout. We immediately retraced that entire move, right? The sellers tried to continue that pressure pushing down. You can see by the length of the wick on this candle that they got rejected and pushed back up. We follow that with a Doji candle, so a sign of indecision. I'll go ahead and take the VS1s off so you can see it. Zoom in a little bit. A Doji candle, which is a sign of indecision. And if we get a higher high, higher close, that will be a positive sign. And this is where learning how to read candlesticks comes in play, right? We talked about this on day one of the workshop. We obviously do this in the foundation course one, where we don't start off by teaching you guys strategies and whatnot. We teach you guys the basic foundational elements of how to read a price chart. And what you'll see is you'll see a lot of traders run from that or maybe not embrace it the way they should. And I was like that. If you would have taught me that when I first started trading, I probably would have been the same way, because my mindset was teach me the strategy. How can I make money? How does knowing this candle make me, how do I trade it? How do I trade it? Right? That's what we're typically all looking for. But when you come in with the right mindset where, hey, I need to learn this before I can do that, right? It's, painting the fence white before you can learn any type of kung fu. When you go in with that mindset of, hey, I need to build this foundation, I need to build this general knowledge because it's going to come in handy later, that's when you start to see things really, really come together. And this is a good example of just reading the story of price, right? The big bullish breakout candle, right? Selling pressure, boom, smacking it in the face. Selling pressure, resuming. Buying pressure, rejecting them, saying no. Indecision, a stalemate. And this candle is going to be very important. Again, if we can give a higher high, higher close, that's going to be a positive sign. If we can stay within, we're going to have more consolidation. We'll have to wait for the next reason. But this can be an aggressive way to get involved as well. And in this case, all you have to do is hide stops beneath this candle right here. And again, we don't know where it's going to complete at yet, but you're gonna have a pretty good risk reward ratio, even if you're going up to that 79 level, which was that conservative level. You can see you're still gonna get a pretty decent, about a 2-to-1 risk reward. Now, some of you are saying, well, Keel, can this form a double top? Sure, of course it can. This could be a double top. And guess what? For a counter trend trader who is interested in this position, that's going to be an opportunity to sell. Double top, RSI overbought on the first top, most likely divergence on the second top. Boom, counter trend trading opportunity. Now, how do you know what to do? And this is where it comes down to knowing yourself as a trader, right? If you are a trader, right, you need to be rules-based, right? You need a rules-based trading plan, a rules-based strategy, something that is testable, verifiable, and repeatable. And most importantly, you need to know what type of trader you are. Are you a counter trend trader? If so, then yes, you may be looking for this move and you don't care about the trend continuation move. Are you a trend continuation trader? If so, then you're looking for that next extension up, and you don't care about the counter trend move, because guess what? Every time you get an extension, you're going to have a possibility of having a double top. You have to retest structure at some point if you're going to trade pullbacks and shoot for the extensions, right? If here's what I mean, right? If you're a pullback trader and you're shooting for the extension, right? You want this big glorious move. At some point, you need to break previous structure. There's going to be that dilemma. If you are both, it's going to be very confusing, because you're going to get to the situation, and this was me, and you're going to be like, well, do I sell now? Do I hold my position and go for the long, or what do I do? Do I reverse? And what you'll do is you'll end up doing whatever your feelings tell you, and your feelings are typically based off of fear or some type of confirmation bias on the news, right? And then after that, you'll go off the previous opportunity, right? So if you decided to hold it and the market sat here and reversed, the next time it happens, you're going to reverse, because you have that recency bias, right? The last time I did it, it did this and it tricked me, so I'm going to do that. And then you reverse it, and then the next time it extends up, oh, I knew I should have caught the extension, and you're going to forever be trapped, right? You're going to be the wounded crab that Jason Greystone often talks about. So as a newer trader, right, this is why we advise that, hey, you start off with one trading style. Think about what type of trader you want to be. Can you end up trading both? Yes, I trade both types of scenarios, but you have to know when and where to trade it, or when and how to trade it. And that's going to be based off of not only your rules, but your general analysis of the market. So long-winded rant there. Didn't mean to do that, but this is Aussie Yen. Again, just a continuation on this. Decent opportunity. Finally got our breakout. Look for the move higher. All right, next on deck is going to be Canada Yen. Live remembers, you remember this one. You can see we made our way up to our VS1 level. We didn't quite get to that yellow line up there, which I don't remember what that yellow line was for. It looks kind of random, but I'm sure we're doing something with it. But we came up to our VS1 level, and then boom, we started reversing. So good move for you guys that caught that. Now there's another opportunity on the radar. And if I zoom out a little bit, who can tell me what we have on the radar? We have a potential cipher. Now we're far ways away, but again, I expect we're gonna see a lot of movement on the yen over the next few weeks, especially with the retirement of the prime minister. So it's not a bad idea to have this on your radar well in advance. But we're gonna have a potential cipher pattern. If we start with our X leg right down here at about 70, right underneath 79 cent, swing low to swing high is gonna be our X to A. Our first retracement right here is gonna be our A to B. Make sure I'm finding that lowest point. Our extension up here is gonna be our B to C, just hitting that 127. And if we can rally back down to 79.50s, we are going to have a CD completion for a potential bullish cipher. Now, of course, there are going to be counter trend trading opportunities here. There will be structure-based trading opportunities here, right underneath that 80 handle. That's something that we can revisit in the live room. We could end up turning into a head and shoulders as well, right? We don't know. Again, this is all kind of part of the update process. As price action does it, we'll update our analysis from week to week. But if you are a pattern trader, right, be on alert for this. Be on alert for this potential bullish cipher. That means buying at 79.52s. So lastly for this week, maybe we'll take a quick look at Bitcoin. We'll see. But anyway, pound Swiss here on the 240 chart. You can see that we have a break and close above structure. Again, like many of our pairs, we've seen these gigantic moves, which is good for traders because it's busting out of the range that we've had. It's going to offer a lot of opportunity. The opportunity on this pair specifically is going to be a buying opportunity where, once again, we can look left. This is going to be very similar to Aussie Canada, right? We have a higher VS1 level right here. We also have an interesting level right here that I would pay attention to. And you can see, right, this is one that Peter Brandt calls the ice zone, right, where you have, it is a head and shoulders, obviously, but where you have previous structure, support turn to resistance, resistance turn to support, right? You can see the left shoulder right here. Boom, finding resistance, breaking off, extending above, and then as a retest, boom, previous resistance, access support. We break through that, Boom, we come back up to retest it again. Retest it, that sounded fancy, retest. Retest it again as, now I can't stop saying it that way, to retest it again as a previous structure resistance. Would not surprise me if this level was important once again, that 121.25 thing. If you want to be a little bit safer, you can default down to 121 even. So that's a good target area, a place to look for a potential move to if we're going to continue higher. So I'm a pullback trader, so I look for pullbacks. So what I'm looking for is this, right? I'm looking for a pullback into our previous level of resistance to act as previous structure support, and then to catch that extension going higher, right? We can kind of dial down on this target once we see this pullback, right? We can do stuff like we can draw fibs in, right? We can't really do it right now because we don't know where this level is going to end, but we can draw fibs in. Boom, 127 will be right there if we were to reverse. But that's something that we're going to have to add on as price kind of shows its hand. But like many pairs, again, we're ending the week with a big bang. We're starting to kind of slowly lose momentum. Would not shock me at all if we saw some type of retracement. And that's going to offer opportunities for pullback traders. So we're not going to go to Bitcoin. Maybe we'll visit that Monday in the live room if we want. I'm going to keep this thing shortish and sweetish as possible. I'll see you guys in the Monday Q&A. I'll see you guys next week. Remember, those Confident Trader Collective recordings are going to be done, taken down on the 31st. So if you didn't watch them already, please invest some time this weekend in doing so, because I don't want to get angry emails saying, Akil, I missed it, they're gone, can I watch them again? Then I got to feel like the bad guy saying, no, we gave you tons of notice, not just for the event, but for, leaving the recordings up as well. It's been about a month, so zero excuses. Hope you guys enjoy your weekend. Until next time, plan your trade, trade your plan. Take care.